Yeah, Carl, we have a 3,800 target for the S&P 500, up about 5%. The sky's not falling, but there are some dark clouds. You know, we're near the upper limit of post-World War II, post-recession market recoveries, so there might be time for a pause here. We are below the street for next year's earnings. We think inflation will disappoint. That'll either flatten the yield curve or raise real yields. Neither is good for the market. You know, your cyclicals have had a great rally, but versus defensives, they're at what we call 20-year resistance. I think the virus will come back in March of 21 after receding over the winter. And then lastly, you know, the defensive stocks, they're relatively cheap versus the S&P. They offer you a portfolio hedge, a barbell.
Interesting. One clarification in that, when you say the virus coming back in the spring after receding, what does that mean relative to vaccine hopes?
The vaccine uptake is problematic historically. If you look at past vaccines, go back to the 1976 swine flu feared pandemic, the uptake was only 25%, despite all the media coverage at the time. There are other examples of vaccinations being slow for the uptake and the distribution. We just don't know how fast it'll get out to the general population. So this virus has actually spiked the first month or so of every season now, 3 in a row. So why should we believe any different about March 2021?
If you listen to the market's message recently, it certainly has been that investors positioning for a pretty strong cyclical snapback, whether you want to look at the valuations of industrial stocks or just the breadth of the market and energy and all these leadership areas. Does the market have that correct, and is that recovery going to come on time to make it seem like this was the correct positioning?
Well, our estimate for
Krishna, I'm sorry, I meant Krishna there.
Yeah, so no, I think, as I mentioned before, everything is falling in place. I think while the virus issue is important, the economic growth picture, you just heard about housing, the economic growth picture is looking spectacular for 2021. So I think the cyclical turn, at least for 2021, is very much in place. The economy has enough momentum. There are enough drivers that'll get us there. Profitability is increasing. You will have these types of spikes and things like that along the way. We have had that for 6-9 months, but the market has continued to go up and economic activity has continued to increase. So I think the key thing with respect to it from a risk standpoint for this to not work out is if we are going to have a general lockdown. And I think given what we see today, given what the political inclinations are, that's really not in the cards. And as long as that is the case, we will talk about virus spreads and vaccine and things like that. Economic activity probably continues apace as things are already peaking from a spread standpoint. And cyclical momentum will get us in a better shape first half of 21.
Shepard Smith here. Thanks for watching CNBC on YouTube.